And we are live. We're live here. Welcome on your TV sets in Texas and Louisiana. We are on the Smart Money Culture TV network, as well as welcome around the world on X, on LinkedIn, on YouTube, and the rest. We have an exciting show ahead of us today. Ian Grigg will join us again today. Ian is the inventor of the predecessor of what is now known as the smart contracts, or it appears to me anyway to be that. We have really a lot going on here in Washington, and a lot going on, of course, on the East Coast, period. A lot going on in the world, right? Let's face it, a lot going on. Legislation was introduced yesterday to end the Federal Reserve. And this is something, guys, I've talked about and we've talked about on this show many times. And it's interesting for a number of reasons. Number one, it's interesting that so many people are one, the number was very stark, right? Thomas Massie put out a poll, and who wants to end the Fed? 86% of people responded end the Fed, and he introduced the legislation. But now that he's introduced the legislation, we need to get behind this legislation because, I see a lot of comments. Oh, this is grandstanding, and this is this and that and the other. But guys, a lot of the stuff is, you know what I mean. It has to start somewhere. And if you talk about the Federal Reserve, and I know a lot of people, the great part about this is, and this is one of the reasons why you have to do this, right? Maybe it doesn't end on the first. Maybe it doesn't end on the first go. Okay, maybe it takes a few times. Maybe it takes a few years. Maybe it takes a decade. I don't know, but people are starting to open their eyes to the fact that of what the Federal Reserve is. There's nothing federal about the Federal Reserve. It's a central bank. We have a central banking cartel that's controlled the country since 1913. The Titanic sank with most of the people that opposed the central bank. In the Constitution, nobody is supposed to be able to coin any money except the government. And we're not supposed to use any money except gold and silver. And they did that for a reason, because they knew if somebody had control of the purse, they saw what happened in England. And if some other people or group or cartel have control over the money, then they have control over the country. And that's why we can't get anything done in this country. And that's why nothing changes, no matter who is elected. And then even when people get assassinated for trying to go against it, like JFK, we never find out what happened. They investigated who killed JFK, and then they never told us. They never told us. I never understood why in the world did people accepted that they didn't tell us. And then here we are, 80, 90 years later, and they still haven't told us. Trump promised us he would tell us, and then he never told us. Napolitano was in an interview, and he said, I asked him, I said, I was really upset that you didn't tell people. You said that you were going to. And apparently Trump said to him, if you saw what I saw, you wouldn't have told everybody either. I don't know. But the point is that anybody that goes against this central banking cartel, is killed or assassinated or worse. They have total control, and they have total control to tax you. And these people are unelected. I've brought up the families a number of times, and it's funny because actually Twitter used to, when I put the families' names up there, Twitter would always hide the post. I would go back and I would look, and I would try to find the post, and it would be like completely gone. And Twitter stopped doing that. So hats off to them. I actually, on May 14, I put out this post, and I'll pull it up for everybody. And I spoke about this. I've been speaking about this for a long time. On stages around the world, as a matter of fact, the monetary revolution. I've been talking about the monetary revolution. So I put out this post on May 14th, a few days ago. All Americans need to ask themselves, Why do the Rothschilds, the Rockefellers, the Morgans, the Warburgs, the Goldman Sachs, the Lehman, Kuhn Loeb, Lazard, Israel Moses, Schiff, and the Stillman families who own the Federal Reserve have the ability to tax us endless amounts of money? Do they own America? The answer is yes. But I like to put things out in a question form so that we get people talking, because if people are talking, then we can have dialogue. It's the same thing with all of these wars and everything else. And I had quoted a tree here, a post, an earlier post. But these families, you don't even know them. You probably don't even know any of these families. And this is who has complete control over the United States. And not only that, and I hate to say it because I always get pushback, but guys, they're all Jewish. Okay? That doesn't mean they're all Jews are bad, but those are all Jewish people. They're all, so now in the same breath, we have this anti-Semitism law going through Congress, and it's probably going to pass, which I also said this is probably going to pass. I'm going to pull up a little bit of that real quick. And I don't like going into this stuff, to be totally clear, but sometimes you just got to do it. Okay. So this anti-Semitism law will make it basically illegal for me to point out that they're all Jewish. If they were all Muslim with that, I mean, if they were all, I mean, it's a little weird. I mean, it is what it is. I have and loved, and I love everybody. I love everybody, but we have to be able to look at that and then say, okay, they're passing this anti-Semitism law. This anti-Semitism law makes it illegal for me to just do what I just did, basically. And why is that getting passed? And why do these families control the United States? Why are they able to print up as much money as they want? And when they print up as much money as they want, they are taxing you as much as they want. Why are they able to do that? How did this happen? So most of the opposition to the central bank drowned in the sinking of the Titanic. Now, whether that was an accident or whatever happened, I have no idea. I mean, I have an idea, right? I mean, seems very, very fairly convenient. But here you have the thing sinking, and then on December 23rd, in the dead of night, December 23rd. I mean, we're talking like dead of night, 30 or hours before Christmas, however many hours before Christmas, they passed the Federal Reserve Act, and the central banking cartel comes in and they start printing money. And here's the thing about the printing of the money, and this is why they're able to control everything so easily. It doesn't cost them anything to control everybody. They're able to pay everybody off. And when I say they, I'm just talking about the central banking cartel. I'm not focusing on it. I'm not targeting any religion. I'm not targeting any people. It's important, though, for us to be honest with ourselves. And if there is an issue, then deal with it. Okay? That's important. But in the dead of night, they passed this central banking, the Federal Reserve Act, and now we have this central bank that it completely is in control. If they want to pay somebody off, they just give them paper dollars. And those paper dollars, they actually make money on the paper dollars. So the Federal Reserve tells the Treasury prints them up, okay? And then they make about 3% is what they charge interest for making those paper bills. So every $100 they make $3 on. I mean, it's crazy. And that's why the dollar has sank so bad, even though it's up today. Dollar's up today. Listen, It's but they're able to tax you as much as you want, and that's why the dollar has fallen into oblivion. And the while gold and everything else has skyrocketed. Gold is up slightly today. Silver is up slightly today. Markets are mixed. It looks like it's pretty poised for a jump, to be honest with you. I'm going to get off to my Federal Reserve rant. It's hard. But guys, we have to stop the Federal Reserve. I understand it might not be this time. I understand it might not be next time. But I'll tell you this. This country will not survive as long as we have this shadowy group of people that you don't elect, that you don't know, that are in total control. And they can tax you as much as they want. And most of Americans don't even realize that they're being taxed. We've been at war basically since the start of the Federal Reserve. We went into World War I in 1914. Federal Reserve Act passed in 1913. The IRS started in 1913. 1914, we go to World War I. Starts with the assassination of Archduke Ferdinand. We just had an assassination attempt at the Slovakian president or prime minister. I've been saying, gosh, man, that's I hope that's not the start of World War III. All right, I'm getting off the end of Fed. Maybe I have to change my background. I have to change my background here. Just get my head to focus here. Let's go back. Here we go. Hofburg Palace. Years ago. Great times. Okay, 80% of okay, markets are mixed. US dollar gains. The DXY is up. The markets have gained a bit. Let's see here. We have Bitcoin. Bitcoin starting to, like I said, everything to me looks like it's poised. It's poised to bounce. It's poised for a nice bounce here. We have stocks. The Dow futures are down slightly. But again, we had a pretty big pullback. So even with the pullback that we had for the inflation numbers that came out, I think that everything looks pretty poised for a move. I think that Bitcoin, the thing about Bitcoin is, and this is why we always tell you guys to diversify, and we're not financial advisors, okay? You got to do your own research on all this stuff. But part of the monetary revolution has been Bitcoin. There's also gold and silver, right? You want to own gold, you want to own silver. And I also say that real estate is good. Real estate is a bit different because the problem with real estate is that you have to pay taxes on it every year, right? It's a lot of taxes, but it's still great. But if you want to you can buy gold and silver at cost with our club here. It's at costmetals.club, at costmetals.com, and use referral club link clubs. Just put it right here at costmetals.com, and you can buy gold, silver, palladium, platinum. Get a little bit every month or a little bit every week, whatever you want. They have a club. You join the club. I think it's like $150 or something like that, or it's $3.99 or something like that, and you can get some gold and silver along with it when you join the club, and then you can buy some every month or whatever you want to do. And we've played some of the statistics over the months of doing the show. But if you bought a silver dollar or silver eagle every month for the last 10 or 20 years, you're sitting on like $1 million. And so that's something that's very considerable. I do expect that trend to continue. I think that part of dismantling the Federal Reserve is the fact that if people don't realize it, I mean, let's face it, paper money is fun, right? You get those paper bills. You can do whatever with them. You can pay for whatever. Not like, it's not traced. But here's the other part about that, guys. It's easy for us, I can tell you from a technical standpoint, to make crypto that's not traceable. It's been done many times, and it is doable. I can do it. We don't do it because the federal regulations, they come after the people that do it. They want to have the only anonymous payments because the US dollar is actually used for more illicit activity than any other currency in the world. It's the US dollar. Drugs, sex, arms, everything. It's the US dollar. So they have the monopoly on anonymous money, and they don't want to change that. But we can do it. We can do it with blockchain. We can make anonymous money. It's out there actually, but we can even perfect it. So takes that argument off the table. But let's talk more about the markets. We have the great Matt Dixon here. Sir Matt, great of the day and research.
Good morning. Yeah, never a truer word. We can, as you say, there's more illicit transactions go on dollar than anything else. Bitcoin, of course, anybody in the world, I can, you can, my wife can, anybody can track Bitcoin transactions. So,
yes.
The fact that people might use them for illicit stuff, you can track them down basically. We've got the technology there. There's companies that actually do it. If you don't want to do it yourself, you can actually employ a company that will track any Bitcoin transaction. But the Blockchain Explorer is there for anybody to use. It's online. You can actually just use it. So I don't understand this argument. It's actually a red herring, this argument about Bitcoin used for illicit stuff. I mean, dollar is used for much more illicit. Yeah, it's terrible.
Yes, absolutely. And that's actually one of the arguments around the world, or even when I talk to the big guys here in Washington, D.C. about it, they will, how would I pay for this? And how would I pay for that? Yeah, I know. I hear you.
Yeah. So I'm just going to go into sharing my screen, and I trust you can see that. I'll just go into...
Yes, we have a
slideshow. We'll go from the start. So we missed some of this, so I hope you can see it today, yeah?
Yes.
Yeah, this is actually M2 money supply, and it's basically showing the amount of money, new money flowing in the system. And we actually got a big reduction in M2. Now, M2, when you look at it on a finer scale, is normally a precursor to recession when you see a reduction in M2 money supply. So this is the biggest reduction in M2 money supply that has ever happened since the 1929 recession, the big, the big recession. So this is the biggest reduction in money supply since that time. So the fact that we saw that, yes, it's leveled off a little bit now, but it's still been a massive reduction. And what's interesting is it's not precisely when you see the reduction in money supply. So we can actually see, and there's been studies into the lag effect. And we've talked about lag effects many times on previous shows about when the Fed do something, like when they change interest rates or monetary policy of whatever sort, there's a lag effect before it actually affects the economy. Now, this is just one measure. This is just apartment prices in relation to M2 money supply. And this is looking in finer detail. But basically, for example, if we look here at 2008, the financial crash, we can see here that basically money supply fell and apartment prices, money supply rose, and then it's sometime after. So money supply rose to this point, and then we at that exact time when money supply rose to that point, there's a lag effect, and apartment prices rose later. And again, we can see it probably more clearly here. Money supply dropped, and this is recently after COVID. Money supply dropped after the COVID stimulus, so money supply fell very sharply. And then you can see the lag effect here that it's later on that apartment prices fall. Now, we've recently seen this big fall in M2 money supply. And so you would expect, even though it's stabilized, it's still fallen a lot from what it was. So you'd expect there to be a continued slowdown in the economy. This is just one measure, apartment prices, but it's just to illustrate that money supply does have an effect on the economy. but there's a lag effect. And so everyone's saying, oh, but M2 has stabilized now, but we still haven't seen the full effects of the reduction or the fall in money supply. So I still think there's a lot to come through there. And we can see again here, basically the relationship between money supply, that's M2 in the green here. And again, you can see the lag effect here with PCE, personal consumption expenditure. So you see money supply falling. And even while money supply is falling, we're still seeing PCE going up. So you can actually see the big lag effect here. And studies have shown that it's at least 5 quarters, so more than a year and a quarter basically, is the average delay time between this change in money supply and the effect on the economy. So we can see here, we got the reduction in money supply, and it was over a year later that we started to see PCE falling. And we've not yet seen the bottom of that. We've seen money supply is pretty well stabilized, but we're still seeing some lag effects. We will still see more lag effect from PCE and from inflation. So I actually go against what a lot of people say about, we saw this inflation drop. And this is interesting because we see here retail sales actually going negative here. Retail sales, excluding gas and autos, going negative for the first time. Well, actually for the second time in a year, I think. So we're starting to see some negative reads on retail sales. This is effectively consumer spending. And the reason I think is interesting is that it's starting to hit people. So ordinary people have actually not got money to spend. And this is why retail sales are falling. So all of this money printing, it actually mainly went into the hands of the wealthy. The wealthy people used it to buy their yachts and their homes and whatever. But ordinary people living the ordinary life, they've seen inflation really affect them and wages not go up in line, and they're suffering. And what it actually means is that the retail buyer, the retail person has not been able to participate in this recent Bitcoin rally. And that's why we're seeing a difference. This time it's different. As Bruce said, it seems hollow. This is the explanation. We've never really gone into it, but this is the explanation of why this time the Bitcoin rally feels hollow for us ordinary people, because ordinary people have been really squeezed with their finances, but the big players who made money in houses and the money that was printed, they're the big beneficiaries from it. So it's actually the big institutions that have driven the Bitcoin rally. And that's why we've not seen alt season. So this, again, it all adds up. It's all the jigsaws making up the big picture. We've not seen an alt season really. And most people, many people are saying, when is alt season coming? And the problem is alt season is only going to be driven by retailers at the moment, retail buyers. The reason being institutions don't really have a route yet into altcoins. They have a route to Bitcoin because Bitcoin has the ETF, the regulated ETF. And so we're seeing funds flow into Bitcoin. That's why we're seeing the great rally on Bitcoin, massive rally from 15,000 to 66,000. So 4x rally since the FTX low. And that's much better than a lot of the altcoins. The altcoins have sort of hung on to the coattails of Bitcoin a bit, but the real big rises have been Bitcoin, and we've not seen alt season. And normally you'll see Bitcoin dominance falling away when you get to this stage in the cycle. But in fact, Bitcoin dominance has actually been increasing more and more. And as I say, that is because ordinary people haven't got the money. They actually got burned quite badly as well. On top of that, when the FTX crisis happened, a lot of retailers got burned, but institutions almost have bottomless pockets. So when the opportunity comes, they still have money available to throw into Bitcoin, especially with this regulated ETF now. So that's why the institutions have been the big beneficiaries and probably will continue to be so, because now the price has risen 4x from the FTX low. Ordinary retailers, they can't buy a lot of Bitcoin. Now it's 66,000. They could have bought a lot more when it's 15,000. But institutions have big funds at their disposal, and through the money printing and the bond buying program and so on, it's allowed these people to get their hands on money. And so that's really the explanation as to why this particular rally in crypto feels very hollow. And it's been on my mind a bit Bruce saying that. I've been looking for reasons, and I firmly believe this is the reason.
Yeah, it's a very good explanation, and you're right. I mean, the average person, and what do? They log into a Coinbase account, which they can get highly regulated market where they can buy, and Coinbase shows you, the top 4. It's basically, it just gives you the top 4, and that's it, or the top. And that's all you ever see. So, and that's even, that even signing up for a Coinbase account scares people. I don't have one. It scares me.
Yeah, absolutely. I won't go into it. We've done enough preaching lately about regulators and so on. But here's CPI. Again, we looked at this previously, but when you see CPI peaking, that's when you see a recession. We saw what I think is really interesting about this one is we've actually seen CPI falling off quite dramatically. A lot of people are saying that inflation is this terrible problem. Well, I think it was the terrible problem, and it's caused a lot of the problems we currently have because prices have gone up so much for ordinary people. But now they're saying that inflation is really stuck. And I actually think it's just a little bit of a pause. And I personally believe inflation is going to actually fall from here. But the problem is it's not going to really help those ordinary retailers because they've already been burnt very seriously. It'll take them a long time to recover from what happened with very high inflation. As Bruce said, is not the typical levels that were reported through CPI. Even they were high. It's actually much, much higher when you take into account various service costs, insurances, etc., which have been way, way, way above the headline rates of inflation. And again, I won't go into this one, but unemployment, we're at a cycle low. It's actually turning around now. We're seeing unemployment beginning to rise. When that happens, recession follows. So my thesis is that recession is coming. They will probably do all they can to stave it off being election year, but I'm not sure what they can do because they can't lower interest rates. And the best way right now to stimulate the economy and stave off recession would be to lower interest rates, but they can't do it because inflation, whilst not sky high, it's still almost twice target rate. So a bit of a concern there. So we'll just take a look at the charts today, see where we're at. We have had a really nice pump, as Bruce was saying. We can see here Bitcoin 66,348. This was precisely what we expected. Now there's still no absolute certainty or guarantee, but we could have been in near the start because we did say we'd had, in previous shows we talked about this 5-wave move up here from the triangle or WXY, whatever it is, correction, and we saw 5-wave moves up from there. So we then saw, and by the way, within that, even within, you can see the 3rd wave broken down into 5 waves in red as well. And there's perfect Fibonacci relationships there. It just adds up beautifully. It's a really nice picture. And then we got a very clear ABC down, giving us wave 2. And then we're moving up there. Now, it's now not a clear picture. So the time to jump in was when we saw the ABC down. And again, it was a pretty good Fibonacci measure retracement from this wave 1 up. We got a nice retracement, wave 2 down. And then we moved up and we said, I was probably one of the few who said, we're going to get weak CPI and it's going to push the markets higher. And I remember saying very clearly, it's just amazing how the charts are telling you what's going to happen before the data comes out. And I remember clearly saying that. It's just weird that everybody was saying that the markets are going to get battered with high CPI, and that's not what happened. We got in line or lower than expected CPI. That gave the markets a massive boost, and we smashed through this resistance around this level and bolted much higher here. And I'm sure we still have a bit higher to go. But there's a potential, there's different ways you can count this. There is a potential for a turnaround in a not too distant future. And what I noticed yesterday, looking on a relatively long term, in fact, I'll go on to the weekly just to really show this. I'll have to open it out. This is the SPX, so the S&P 500. And I think we can see, so we're now at new all-time highs. And I did say that we're likely to go to those new all-time highs. So that's exactly what happened. But even if I move this down to where it should be, we're not yet finished the week. We're virtually finished the week, but we can see quite clearly here the peaks in price here. We've got an upward slanting connection between these prices here, the price peaks, and the corresponding RSI oscillator is showing a decline in the peaks here. So that is called regular bearish divergence, and that's warning of a potential turnaround. Now, what you would ideally like to see would probably be a red candle following this just to confirm it. So what I do whenever I see divergence like this is regular bearish divergence, warning of a turnaround in price toward the downside because the volume is falling off. This is very typical of a fifth wave in Elliott Wave, where basically we mentioned this again in previous shows, that the push up in price is not being supported by a push in volume. So what this tends to be is retailers are still very exuberant about these amazing brand new all-time high for the S&P 500, for the stock markets, and the retailers are still jumping in, pushing the price higher. But actually, this point here with these red candles was the point that the institutions sold out. They were taking profits from the previous massive, absolutely mega run-up that we've had in the S&P 500. They then took profits, but retailers thought, okay, we're still near all-time high, and they've been pushing it higher. It's gone to new all-time high. This tends usually to be retailers who are not really aware of where we're at in the market cycle. They don't look at things like divergence, but this is just a clear sign that the prices are rising without volume follow through, probably telling us institutions are not the ones pushing this. So the institutions are normally the right side of the trade. Retailers are normally the wrong side of the trade. And at some point, it may not happen quite yet. I've got a target a bit higher for S&P 500, but there's a real chance that we could turn about reasonably soon. We could turn towards the downside. And that's why when I looked at Bitcoin, and we just looked, Bitcoin is looking great. Again, that's probably too big a chart to look at. And even that, I think we'll go back to the 4 hour again, just to show where we're at. But Bitcoin is basically showing us that there's various ones. We could have basically a wave 1 up, 2 down, 3 up would be substantial. And wave 3, if it's a wave 3, the minimum target would be 74,000. And that would be a minimum if it's a wave 3. But then if we're looking at a 2.618 extension, we're looking at 84,000 here. Now, I've heard 84,000 bandied around a lot. So it is quite possible that this is wave 1, wave 2, and we're going to get a real strong impulse to the upside for wave 3, taking us probably to the 84,000 level. And then we get a small pullback in wave 4, and then a fifth wave even higher. So that's perfectly reasonable, but we have to look at potential bearish alternatives, and it could just be that we actually challenge a previous all-time high around that 74,000 level on Bitcoin, and potentially instead of being 1, 2, 3, this could be A, B, C. So we've had a correction down, a correction up, and then a further correction down. But even if that were the case, longer term, Bitcoin is still looking bullish. So I wouldn't be overly concerned. As long as you're not leveraged in these markets, I think Bitcoin still has an amazing future and amazing fundamentals behind it. And a bit like gold, we saw that gold, it had that correction down. It may again just be a corrective move to the upside, and we could get another wave down. So this ABC could be part of a larger A, B, and then a further C down. That's entirely possible. But even so, as long as it's an ABC, it's what's called a corrective move against the overall trend. And so it's telling us that new all-time highs should come. So even if you buy into gold today, it could actually just go straight to the upside. Or even if we do get a pullback, no particular need to worry, I don't think, because this looks very clearly corrective to the downside. And I think that even if we get a further pullback, as long as you can hold on to your position, you're not investing money that you need to spend tomorrow, then I think the future is really bright, and gold is glistening there, looking for potential new all-time highs in the relatively near future. So gold's looking good. It's up 0.4% today. In fact, everything's looking good. It's not often you get the whole thing looking green. Interesting, GameStop. I don't know if you followed that, Bruce.
I did a little bit. I
mean, absolutely shocking. This is like a meme in stocks. Effectively. it is really a meme in stocks. And the pump it had, I mean, look at this from, down here at $12 to here at well over $60. So 5x pump. And it's based on nothing. It is a meme. It's actually based on nothing. And honestly, I could really see this falling away exactly the way it's done. So it's now fallen from 64 down to 29. So it's fallen more than 50% now in just a few days. So very, very dangerous. Effectively a meme stock, nothing behind it, no profitability. It's a shocking gamble and not one I would ever want to get involved with. I think crypto memes are actually a lot better than something like this.
I'll tell you. So what they do. So the story behind that as well. What they did. They and these guys, the big institutions, I think, lost like billions of dollars.
Yeah.
They liquidated. There was some massive shorts. This was like a year or two ago. There were some massive shorts.
Robinhood, wasn't it? It was to do with Robinhood, wasn't it?
I think so. I don't know the whole thing, but and they just kept pushing it up, and of course the big guys kept strengthening their positions until they just kept pushing it up, and they liquidated them billions.
So Robinhood, well named, was kind of for the people, and obviously the big hedge funds. These smart hedge fund managers, they were shorting it because it was basically a dead. GameStop was pretty much a dead business. And so they were shorting it. They knew it was going to go down. But actually, everybody got together within this Robinhood massive community, got together and buying it higher and higher and higher. And basically just collecting the money from institutions. For once in a blue moon, it happened the other way around, where actually the ordinary people gained from the big institutions who'd shorted this stock like crazy. Borrowed and sold like crazy, and it just kept going higher and higher and higher. And the losses from institutions were absolutely eye-watering, but the ordinary people, did very, very well out of it, made a lot of money out of that. And this now, GameStop, again, it was pumped higher, but it was mega risky. And we can even see the massive gaps here to the upside. So there's not as much liquidity as you would like in something like this, but actually this was to do with the circuit breakers, wasn't it? When the price was rising so fast, the circuit breakers leapt in. That's another reason why it's probably not as good to trade something like this, because you've got the intervention, whereas at least with crypto, it is more of a free market. You don't get these circuit breakers, which can cause problems. Not allowed. It just
the only circuit breaker we have. I mean, the only one. The main circuit breaker we have on Bitcoin is Coinbase. They seem to always have problems with their platform whenever there's a big pump or a big dump.
Yeah. So where's Bruce's coin? Okay, Doge. Yeah, up nicely today. Up a little bit. 50, still 15 area. Book of memes up again. So yeah, basically, actually, some of the cryptos, the biggest gainers. We've got a nice gain today on Ethereum, and we've been talking about this a long time, saying that this pullback here was corrective. Just need to phase out a little bit there. This pullback was corrective here. We can see it all overlapping, this wave overlapping this wave, etc. So we did say that we're going to get some reasonable upside coming pretty soon on Ethereum. That's precisely what's happened. We've also come out, I say we've come out, it's actually eBay ratings have highlighted a lot of these pumps well in advance. So we posted Litecoin, and we actually mentioned Litecoin on the show as well, saying that this was a corrective pullback. And we actually got an eBay upgrade right down here, just here before the news came out for CPI. There's an substantial eBay upgrade, and then we got a very powerful pump from, the price at the time was 78, it's now 83. So, that's a really nice percentage gain there, and probably still got somewhat higher to go. So that was Litecoin was really good. XRP has begun to wake up a little bit. Again, we did mention that XRP. Again, yesterday had a little upgrade on eBay, and it's been pushing up quite nicely. Solana is yet another one that we talked about. And again, we talked about it being a correction to the downside. Wave one up, another correction, A, B, C here. Very clearly see A, B, C of some sort, or it could even be some potential triangle, A, B, C, D, E triangle. That's possible because the E wave can undershoot. So it could even be a triangle. If that's the case, it's not one, it's actually probably an A, a B, and a C to the upside. So all we were saying was, from this correction, you expect some good upside. And that's precisely what we're seeing with Solana from 141 to 168 now. So again, massive percentage gain there. And these are ones that we highlighted in advance on the show. The only one that's lagging just a little bit right now is one that we highlighted as well in the show was Toncoin, but it had its pump earlier than everything else. I still expect it to move substantially higher from here because again, we've got a very clear, from this point here, very clear ABC. And when you see three wave move down after an impulse like this to the upside, a strong impulse, three waves back, then you expect more upside. So even though it may even be a buying opportunity for little bit more dollar cost average, perhaps into Toncoin. So that's looking like a real good one.
We have Ian Grigg is back as well. Remember, he joined on Friday.
Oh, great. Okay. I'll give way to Ian. So being good. Have a lovely weekend. Thanks for the opportunity and look forward to listening to the next segment.
Love it. We love it. It's great. And we're all along pretty much with a close eye and some close stop losses to take your profits. Go to tradesmart.club. Is that right? No. Learnhowtotrade.club. Use TradeSmart10 as the discount code and trade with us. Thank you so much, Matt.
Thank you. As Bruce says, take the profits.
That's right. You got it. They're not profits unless you take them. Take the profits.
Absolutely.
Hello, Ian Grigg. How are you? Ian.
Hi there. How's it going?
It's going great, man. It is going very well. Ian Grigg, he returns to the Impact Money Show. He came on last week. If you remember, he's the inventor of the recording contract, a concept that merges legal contracts with digital signatures to form smart contracts. Ian Grigg's innovations have significantly influenced the development of smart contracts on platforms, including Ethereum. He's a bit of a historical figure. It's great to have you back on the show.
Yeah, thanks. Well, I don't know if I've influenced much in that respect because Ethereum and places like that don't use the Ricardian contract. But, one day they'll probably be forced to once the regulators figure out that actually most of their problems are solved by simply asking, where's the contract? If they can ask that question.
Where is the contract? That's right. It's
exactly.
One of the most important things, right? Where's the contract? Where's the contract? Pretty interesting. So how are you? How's your week been? What are you working on?
Oh, it's good. Where our Hover Trusts team are meeting in London next week. So that's going to be big for us. We're putting together, I've got a presentation conference there. We're doing lots of work and so forth and so on. We're spread across the world, of course. So always important to meet up.
Very good. And that's, I think I was there last year. That's at the London Blockchain Conference or London Bitcoin Conference. Is that right?
That's right. Yes. London Blockchain Conference. Yes. At the Excel.
Yes. Very good. So I know one of the things that was interesting that we spoke about last week was basically the system that you were putting together for people to participate. Can you talk a little bit more about that?
Yeah, you're talking about the social savings concept. This is where we've got poor people, relatively speaking, compared to us, who live in Africa, which is extremely corrupt. And there, in order to solve the problem with corruption, they get together as a small club. They save amongst each other, and they discipline each other, and they protect their savings inside the group, which they call a chama. Certainly in the Kenya region, they call it a chama. There's a name for this all the way across the Africa and other places, and that's the way they manage their finances. And they have to do that because they've got balloon payments coming up. The kids need to go to school. There's a payment in January, another one around August, and if they haven't saved the money, they can't put their kids in school. If they haven't got the kids in school, they can't go out and work. So it's a very interesting solution where they've come together as a group and forced each other to save. What I'm about there in that respect is creating an accounting platform so that they don't need to do it all on pen and paper, and they can get some of this digital mojo, which improves their governance and improves their efficiency and so forth and so on.
Interesting. Well, really cool. I know this stuff is it's so important. I mean, that was one of the things we were talking about. You probably were backstage for part of that. Is that retail has missed out a lot on this this pump. And pump, I guess, is probably kind of a bad term to use, but The stock market is at all-time highs this week. Bitcoin is near all-time highs. The Hong Kong Stock Exchange, I feel like, is at all-time highs. Gold's at all-time highs. Everything is at all-time highs, and the average person is having trouble, more trouble now to pay their bills than they did a couple of years ago. What's going on? What's your take?
Well, now you're talking about global economics, which is a really difficult topic because you have to follow it. And if you're following the wrong theory, you're not going to be able to explain it. But I think the Western economies have reached, if you like, the peak of their efficiency, and they're on the gentle downward slope in the future. We see in all the Western economies more and more people drifting downwards in the economic scene and becoming poor, basically. The separation between the very rich and the poor has increased over time. Governments have done nothing about this except basically set things up for the rich to get richer, and people are starting to get very angry. So I see that in the future there's going to be a problem, and we're getting close to the point where the ordinary people are going to be saying, well, actually, what's going on is not good. We need to change it. How are we going to change it? The classical thing is you vote that party out and you try the other party, but the parties are both the same. So what are we going to do? We're going to have to find some other way. And there's an upswing in people now talking about democracy not working for them. It's certainly not working for them. And they're starting to think about alternatives. What do they do? This, of course, is an extremely difficult thing for the West to consider because democracy has been the word that we've all believed in since our entire lives, and now it's come under question. So what happens now? Well, what happens after democracy?
Well, it is quite interesting. I've been saying for a while, and I have to say that I didn't coin the phrase myself, but we're in the age of the dictator, right? We have like these people. You have Putin, you have Xi over in China. You have, these are the guys that are really kind of moving their countries forward in what looks like in a lot of ways, let's say, more attractive way than we are. And part of that too, you now see we have this legislation with to end the Fed, but most people in the US are completely oblivious to the fact that the Fed is the Federal Reserve is not federal, that the US is not controlling monetary policy, that it is a group of families that is central. It's a cartel. It's operating as a cartel. Obviously the legislation is, I think it's great because it's bringing it up front. Obviously, I think this piece of legislation is not going to do anything, but we have to start somewhere. What's your take on that?
Well, I think those sort of end the Fed ideas have been around for a long time. I first got familiar with the US scene maybe in the 90s, and people were talking about it then. Do they have a prayer in hell, a prayer in heaven of being able to do this? I very much doubt it. But I think that the pressures are building, and I've never seen so much pressure at the moment against the powers that be, if you like, against Washington, D.C., against London. And if you look at, for example, Britain, I consider that the Brexit vote was a punishment against London. It wasn't anything to do with Europe. The people in the country were angry. They all knew somebody who'd lost their jobs. They all knew that there were lots of immigrants. They all had these things that they could see. They could see poverty. But meanwhile, London was booming in those times, and still is. So what was happening here? The politicians had left the country to itself, and the country rebelled and voted themselves out of Europe. Now, the actual outcome was even more disastrous, but they still acted to punish London. So I see that that pressure is building and building and building. And of course, the people in Washington, D.C. and London and so forth remain oblivious to the conditions in the country. So it's going to continue and continue until we reach some spark which sets off the fire.
I would have to agree with you. It's pretty interesting. The whole thing is pretty interesting to watch. So you have your Hoover Trust.
Yes. So it's quite interesting. If you look at the crypto field, it's always been traumatic. It's always been difficult. And part of the reason is that you've got very large corporations like Coinbase and Kraken and Bitfinex and so forth, and they're managing a lot of people's value. Now, how do they do that? Because they're crypto, they believe they're creating new rules for everything, new ways for everything. But in fact, what they're doing is discovering what of the old world is good, and they're reinventing governance by borrowing the techniques or by being forced to use the techniques of the old world. So if you look at, for example, the DAO, a DAO, D-A-O, the Decentralized Autonomous Organization, that's basically a training lesson in why a corporation exists. These lessons are happening over and over again in that field. And what we're about is saying, well, actually, you don't need highfalutin regulation. You don't need to rejig all the rules. You simply need to use a trust. If you use a trust, you leap forward into a high level of regulation and a high level of fiduciary duty. The trustee has fiduciary duty. And this is resolved through 1,000 years of legal work in the courts and regulations and so forth. So you jump up, you leap up to, if you like, best of breed governance. And in that becomes very important when you're looking after assets. And it also has another particular effect, which is it establishes the jurisdiction where the trust is. So according to international trust law, we have this situation where, well, the jurisdiction is where the trust is, and the beneficiaries are more or less irrelevant if you're talking about standard civil matters. And so that means you get that the exchange or the business that is using this particular mechanism gets out of the problem of being regulated in 2 places or 183 places, because the regulators seem to think that they have to regulate according to the location of their people and the location of the businesses, which creates a double effect. So if you can remove one of those hooks, you can simplify everything for everybody. And that's what we're about. We're setting up trusts for people such that they can enjoy those benefits and get access to crypto and so forth and so on.
So that is really interesting. I mean, I think for the average person, it's like you can put your house in a trust as well. You put your house in the trust, and I don't think it gets rid of. I'm actually looking into it right now. I talked to my buddy. I don't think it gets rid of your taxes, period, on the house, but it puts you in a position where everything that you spend on the house is now deductible, and you can end up basically paying zero taxes on, or what is the effect of zero taxes on the house. So can normal people get involved with the Hoover Trust?
Yes, well, in theory, yes. We haven't really opened the doors yet. We're going to be doing that soon, I hope. We're just using it inside for a group of insiders, just to sort of get the kinks out and so forth. But it is definitely built to be, if you like, a retail client operation, such that ordinary people can come in there, open up an account. They think they're opening up an account. What they're in fact getting is a trust. Every person gets a single trust. And that just gives them the protection that the trust gives to assets. And yes, absolutely. In theory, you can put anything in a trust. The trust is the mechanism to store assets safely. And crypto is just another class of assets. So it adopts it quite easily. There's no difficulty there.
So that's pretty interesting. So you could put I could put my house into this trust structure. Do you have so how long have you guys been working on it? Do you have a timeline? What are you looking at? I mean, it's very interesting. A lot of people are looking at this, especially right now in the US. We're just getting taxed into oblivion. We got the tax on the front end. We have the tax on the back end. We have, 50% tax on every time we fill up our gas. We have, you take a $100 bill, you spend it, a few times, and it's like completely gone of tax. I mean, you spend it like 2 or 3 times, it's completely gone. And
yeah,
right.
I
don't know if it's ever been like that before, but it's certainly become glaringly obvious that it's like that now. And people are starting to realize it. And then what do we do? And it's like you talked about a little bit earlier, I mean, of course, these are big things, but how do we get ourselves out of this? How, what is going to happen, in 10 years when my daughters are having a family, what's it going to look like? I mean, are they going to, and then even if I leave my house, if I have my house in a trust structure, then I can leave it to them and everything like that. But if I don't, I get taxed into oblivion again after paying on taxes on the house my whole life. Then I get taxed into, they take a half of it again. It's like they make it so you can't leave anything. It's on purpose. It's only way to explain it to people, to make it to understand. They want to keep the people where they're always having to work, and that's how they have this this tax base of money,
Yes.
the endless stream of money that comes in.
Well, yeah, and you know, if you like, the Americans are experiencing something that the rest of the rest of the Western world has been experiencing for a long time. The tax rates are higher in Europe and in other
Yes.
countries. We've always looked at Americans with jealousy, thinking, "Wow, your tax rates are so low. Maybe the Americans are starting to catch up." And there is, you know, really there is this big move in the OECD, and this has been around for 20, 30 years, that says we should unify all our tax structures so that they're the same between all the OECD countries. And if you like, it's part jealousy, because the high tax countries look at the low tax countries and say, well, your taxes are too low.
Right.
Americans should look at what's happening in Europe, and you would be horrified. You know, people do not want to see across the water and see how bad it is in other countries. So how do you deal with that? Well, there's in the world of taxation, the problem, of course, is that fundamentally you have a big problem with your taxes because you live in that country. And the best thing to do is to try and live in another country. And once you do that, you get opportunities to be able to structure things as you're going out and in. So the difficulty, of course, is that for the nation, the vast body of tax that they're collecting comes from the people that will not move. And therefore, your answer is to move, which is why, for example, the rich don't get taxed particularly highly, because they can move. They can move their assets, they can move themselves, they can move their processes, their businesses, and so forth. They can move outside the net, whereas the poor and the middle classes don't move. So there's not much they can do. So I think, you know, at some point you're going to see a bit of a rebellion. People, if you take the US, for example, people move to Puerto Rico. And if they want to move that far, well, they can pick any of the 20 or 30 jurisdictions around the Caribbean, because they're all quite nice. People can move to Mexico. The life in Mexico isn't bad. I spent some time there, and it's a pretty good life. It's not American, but it's not bad. So what's going to happen? I think there's going to be more, if you like, middle class Western immigration in the future, because people are just going to be upset about what's going on in their homeland.
Well, and just to if you're watching and you're not familiar with some of these, I guess so. I don't know if you all loopholes, but if you move to Puerto Rico, if you're a resident of Puerto Rico, you have zero capital gain tax. Now, that is the only, I can tell you as an American, that is the only loophole as an American, besides putting your funds into a trust structure or some other type of different vehicle, like you're saying. Otherwise, you get taxed on your capital gains. And I'll let you jump in. The Bahamas as well, you're still obliged to pay your taxes, but the Bahamas does not charge income tax. And since they don't charge income tax, they also don't prosecute people or follow extraditions, in theory, for people that owe income taxes. And so those are two of the loopholes there. That's one of the reasons why John McAfee was over there. I went over to see, I'm sure you know John as well. I went over to see John when he was in the Exuma. I wish he had stayed.
Poor old John. Yes. And the problem, you know, you've got to be careful with those sort of things. The people on the islands, especially the salespeople, will be telling you how you can solve your problems with taxes. And you pay them to set it all up. The issue is that they've got your money and you've got the situation. You've got the belief and the problem. And those things can collapse pretty darn quickly. You just have to make one mistake, and in comes the various tax departments and says, you know what, you owe us tax, here's the bill. And it's a greater fool's theory, if you like. Those people in the Caribbean and so forth, they make a lot of money selling these structures to ignorant white people who come out, fall in love with the country, and say, oh yes, I can live the rest of my life on the beach and pay no taxes. Guess what? You make one mistake and you're toast. And you don't know the business. They know the business, but they're not telling you the secrets. So you've got to be very careful there. It's not
You
it's
do.
not an
Yeah.
easy thing to do.
It is not an easy thing to do, and I was having fun, so I went a little long in the show. I hear my daughters are moving around. I have to get them to school. But Ian, another great segment. Thank you so much for coming on. How do people find you? Website, social media, all that good stuff.
Yeah, hovertrust.net is our business. The website is very plain, though. That's because we're not advertising there. But we have some channels. We've got Twitter, Hovertrusts, at Hovertrusts on Twitter, LinkedIn, and YouTube. So that's where you can see more about trusts.
Amazing. Ian, thanks so much for coming on. Let's do it again soon.
Okay, then.
We'll
See
see
you
you
later.
guys in 7 or 5 hours on your back on your TVs in Texas and Louisiana, and we'll be streaming around the world as well. Have a great weekend if we don't see each other again. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost. Become a champion of free speech.